Thanks, Peter, for the introduction. So I'm Richard Howard. I'm from Aurora Energy Research. And I'm going to continue the case study looking at sector coupling between the power sector and mobility. Me and Cecile planned a double act. So she's already provided a lot of context on electric vehicle growth in France. And what I'll be looking at is what impact does this have on the French power market and on particular assets. Just to give a very quick introduction to who Aurora Energy Research are. We're an energy modeling, research and consulting firm. At the heart of everything we do, we've built a suite of energy market models which we use to answer interesting questions, both through research publications, that's the area of the business I lead, market forecasts for particular markets and insights into those markets, through consulting, and also through software tools. For example, we recently launched a tool which allows online visualization of economics of particular wind farms at an asset-specific level. We provide these services across Europe with 120 experts in our Oxford, UK and Berlin offices. If you want any more details, find me at the end. So as I say, I'm going to dig a little deeper into the case study on electric vehicles, but just very quickly to zoom out for a moment. Peter mentioned some of the figures just now, but as it stands, well, by the end of 2019, actually, we'll have over 7 million plug-in electric vehicles globally on the road. Around 5 million of those are full battery electric vehicles and just over 2 million more plug-in electric hybrids. This has been promoted by a number of different factors, the uptake of EVs, both on the regulatory side with targets, also financial incentives in many countries. In fact, in the countries where we've seen the fastest uptake, such as Norway, there are very, very generous financial subsidies for electric vehicles. It's also a product of falling costs of electric vehicles as well. And that's what we look at a little bit more in this next slide. So what this slide looks at is the total cost of ownership of a full battery electric vehicle versus an internal combustion engine vehicle. On the left-hand side, we start with the super mini segment, and we see already Renault Zoe cars being pretty popular in France, with around 13,000 of those already on the road. That's the most popular EV in France right now. And why is that? Well, if you look on a 3-year total cost of ownership basis, factoring in the upfront cost, the residual value, and the running cost, having a Renault Zoe is already cheaper than the petrol equivalent. On the right-hand side, we look at the same thing, but for C-segment cars, so sort of average size family saloon. And here, the full battery electric vehicle is not quite on cost parity with the internal combustion engine vehicle on a 3-year total cost of ownership basis, but it will become on parity within the 2020s. By roughly the middle of the 2020s, it would reach cost parity, and it could even move faster as we start to see more and more car OEMs coming into the space and plowing lots of money into EV development. So this will also be a massive push with the deployment of more EVs over time in France and also globally. We've touched on some of these issues already, but what we wanted to do already at Aurora was to look at the impact of various different scenarios of EV uptake on the French power market. And we did this by analyzing 3 scenarios. So in one dimension, we look at the number of electric vehicles on the road, and we had our own bottom-up assessment of what that could look like based on total cost of ownership and costs of electric vehicles over time. And we come to a very similar answer to the answer that Cecile presented, and the RT figures of between 14 and 17 million EVs on the road by 2035. The second dimension, though, is to think about what degree of smart charging do we have for this EVs? It kind of goes to the heart of the question of the gentleman over here on the side. So we look at 2 different scenarios. One where we continue what I would describe as slightly more dumb charging, allowing people to do what they like, and a second one where it's much more smart charging. And so we have a central scenario with more dumb charging, a smart scenario as well. And just to unpack that a little bit more, what do we mean by smart or dumb charging? So the first version is the dumb charging or uncontrolled charging. This is the red line on this chart. And what this shows is how the pattern of charging that most users adopt right now, which is they use their electric vehicle in the daytime, they come home, they plug it in, and they start charging straight away. And this adds significant demand for EV charging right at the moment where we already have peak demand on the system, between the hours of roughly 5 and 8 or 9 p.m. in the evening. So contrast to that, other forms of smart charging. So firstly, indirect control. This is where we don't take control of your charging, but we allow you to have, for example, a time of use tariff and respond to that yourselves by changing your charging behavior. And so a lot of electric cars have a button you can push that says they'll start charging, even though you plug it in when you get home. You press the button and it starts the charging later. And if you're incentivized to do that, you might want to push that button. That's a very simple, that's the first level of smart. There's another level of smart, which some energy retailers offer already, where they are actually optimizing the charging to the best point in the day when there is power available at a cheaper price. And that's direct control. That's where you relinquish control of your charging to your energy retailer. So in our smart scenario, we have much more of these smart solutions in the modeling. What does this do? So across the three scenarios we look at, central, high EVs, and high smart EVs, firstly, a very counterintuitive finding that the high smart EV scenario actually significantly boosts peak demand, that is, demand in the hours in the hours that we see the highest demand in the year. What is that demand level? It's actually higher in the high smart EV scenario. This is a pretty counterintuitive finding, because you would expect that it would be the opposite, that the high dumb EVs would have the higher demand. But there's a second thing that's going on. So in this world of large numbers of EVs, but smart EVs, we're actually shifting the charging more towards the daytime, when there would otherwise be an excess of solar generation in France, which France would be exporting to other countries. France actually has an excess of generation right now, and by adding more and more renewables on the system, we're exacerbating that problem and exporting more and more power from France. Smart EVs actually would make better use of that power, the solar power in the middle of the day, and actually so the peak demand period would shift from being in the evening, around 6 or 7 p.m., to being in the middle of the day at noon. Consequently, the prices in these peak hours would actually crash by 2040. So in 2020, we have prices in peak hours of over £100 a megawatt hour in the wholesale market. By 2040, with lots of smart EVs, the peak price, which is now the peak hours in the midday, peak demand hours, but the price is much, much lower. So what I'm trying to talk you through here is the fact that adding all these smart EVs to the system fundamentally changes what's going on in the power sector with some pretty interesting and counterintuitive results. So that's what's going on at the system-wide level. What does it mean for particular assets? This is what we start to look at here. So, and this slide talks firstly about solar. I mentioned solar already on the previous slide. One interesting aspect of all of this I already mentioned, but by having these smart EVs that can shift their demand to the middle of the day, that's making better use of the solar generation in France, and it actually boosts the capture price, that is the average price that solar generation gets in the market, boosts that by up to £5 per megawatt hour in 2030. So roughly, by actually more than by 10%. It's actually pretty meaningful when we think about solar investments. It would boost the IRR of a solar scheme by more than 100 basis points for a new scheme coming on a merchant basis, which is very significant. It could make the difference between a project that happens or doesn't happen. The converse of this is, by having lots of smart EVs on the system, you dampen daily price volatility. You have less volatility in the market when what happens is that smart EV charging can shift across different times of day. That's particularly important if you were thinking about deploying a grid-scale battery in France. And what we see here is, in our high smart EVs scenario, we see less daily price volatility in 2030 than we do in our central case, by quite some margin, by 20%. So having more smart EVs on the system is actually bad for the deployment of grid-scale batteries. It's also It has an effect on thermal generation as well. So in our central scenario, we actually see an increase in thermal generation by CCGTs and peakers by 2040, because France is actually bringing quite a lot of nuclear off the system by that time, retiring some of its nuclear, and something has to fill the void. And in our central scenario, some of that is thermal generation. In this high smart EVs world, that doesn't happen to the same degree, because the smart EVs shift their demand towards the midday. We make better use of solar, we reduce the evening peak, and we therefore need less thermal generation. So smart EVs actually affect assets across the whole system. Very finally, just to wrap up, there's often a critique of electric vehicles in some countries that says, well, if we're driving around in electric cars, but we are powering that with gas or coal-based power, then will they actually be low carbon? In France, they're very low carbon because the system is so heavily dominated by nuclear and growing proportion of renewables. So just on the left-hand side, we show just the simple comparison of an ICE, internal combustion engine car, and a battery car. The battery car is already more than 90% lower emission on an emissions per kilometer driven basis, and that will actually fall even further over time. So EVs really can be an enabler to decarbonising those residual emissions in France in transport, and also enabling the renewables revolution in France as well. I'll leave it there.
Thank you. We have time for some questions for Richard. Yes, please.
Hi, I'm Jason. I'm from Avere. Actually, Avere France is our member. I have a question about your last point about the coal and gas powered networks. So have you done any studies not in France about the same question about coal and gas-powered electric cars and its impact on the networks?
Yeah, so we've actually done a very similar analysis across several of the power markets that we do research on. Germany would be an interesting example where there's a lot more coal still in the system, and therefore if you're charging an EV, if you think about the end-to-end emissions and think where that power is coming from, quite a lot of it could be coming from coal. Despite that, the BEV emissions are still lower, even in Germany with that coal-based power. They're already lower, and they will fall much quicker as Germany phases out coal and increases its share of renewables and gas.
Thank you for this presentation where you take the economic side of the story. I have one question about, again, infrastructure side. When you are into the dimensioning days for the electricity infrastructure, which is a Dunkelflaut, no wind, no sun, in the middle of the winter. Again, if you have some ultra-fast charging somewhere in the picture, during those days, that are the ones that will dimension infrastructure, what will be the impact of electric vehicles?
I think the Dunkelflaute is one of the most problematic questions for all analysis of how we're going to decarbonize the European energy system. I think to your specific question about ultra-fast charging, I don't see ultra-fast charging being a big proportion of the overall charging of electric vehicles. Why is that? Well, the use case for ultra-fast charging is generally when people are in transit from A to B. If I want to drive 300 kilometers, I will need to charge my electric vehicle on the way, and I want to do that really quickly in a motorway service station. But this is an expensive form of charging. What most people do most of the time with electric vehicles is charge them at home or at work. And as Cecile showed in her previous presentation, there are many, there's 250,000 charging points. Most of these are at home and at work, and people do most of their charging in terawatt-hour terms at home or at work, and then they resort to the ultra-fast charging only where they need to, because the cost is 5 or 10 times higher, maybe. So they avoid that if they possibly can. So I don't see it being a big problem, actually. That specific problem, there is still a problem about what happens in a kalte Dunkelflaute generally when we have a cold windless spell and we need we have so much electric heating in France, power demand shoots up. What do we do? How do we serve that situation? That's a different question.